Hello and welcome. Today we identify 5 growth stocks under $10, trying to find a niche in some of the most exciting and fast-changing sectors at this time: AI, electric vehicles, social media, digital real estate, and biotech innovation. The companies have entirely different business models, but share one thing: high growth potential and high risk. Some are growing very fast with AI-powered technologies, others are still struggling with profitability, cash burn, or market uncertainty. So they are very speculative but intriguing to watch over the long term. But before we get into the breakdown, it's important to say that this information is not financial advice. This video is for entertainment and informational purposes only. Always do your research or consult a qualified financial advisor or trusted investment communities before making any investment decisions. If you enjoyed this video, please consider subscribing and leaving a like. It really helps us stay motivated and continue creating more valuable content for you. Let's begin with the first company listed on the Nasdaq Composite and break it down in detail. SoundHound AI Inc. is basically a company that builds voice AI, so it lets people talk to machines and get natural human-like answers back. It develops tools like Houndify, which helps other companies create their own voice assistants, and SoundHound Chat AI, which can respond using real-time information like weather, sports, and travel updates. It also builds AI systems used in customer service, restaurants, and cars. So instead of typing or pressing buttons, you can just speak and get things done. Now, from a market perspective, the stock is trading around $8, and recently, the company reported strong growth, about 52% revenue growth, reaching roughly $44.2 million in Q1 2026. That growth is mainly driven by its expanding AI capabilities and enterprise adoption. They're also working on a possible strategic acquisition of LivePerson, which could add around $500 million in revenue and help scale the business further. On top of that, they're guiding full year 2026 revenue in the range of $225 million to $260 million, expecting continued growth as they expand platforms like Oasis. But it's not all smooth. The company is still losing money and competition is intense, especially from big players like Microsoft and Cerence. So in simple terms, it's a fast-growing AI voice company with strong potential, but also facing tough competition pressure. Lucid Group Inc. is an electric vehicle company that designs and builds EVs, along with its battery systems and powertrains. In simple terms, they don't just make electric cars, they also build much of the technology inside them. Their main products include the Lucid Air sedan and the Lucid Gravity SUV, and they also develop their own in-house software to run these vehicles. They sell cars directly to customers, either online or through their own retail locations. Currently, the stock is trading around $6, and the company is going through a tough phase. Analysts point out that it's dealing with heavy losses and cash burn, which means it is spending more money than it is making. There are some positives, like partnerships with companies such as Uber and backing from Saudi investors, and there's long-term potential in areas like robotaxis. But at the same time, investors are worried about execution and whether the company can scale production effectively. The stock has also recently fallen to 52-week lows, and market sentiment has been weak, showing low investor confidence at the moment. Still, some analysts remain cautiously optimistic. Even though they've reduced their price target to around $14 from $17, they still see potential if Lucid improves production efficiency and unit economics over time. So in short, it's a high-potential EV company, but currently under pressure, with big challenges to fix before it can fully grow into its promise. Opendoor Technologies Inc. is a company that runs a digital real estate platform in the United States. In simple terms, it helps people buy and sell homes online. The company actually buys homes from sellers, then renovates or manages them, and later resells them to buyers through its platform. It also offers related services like real estate brokerage, title insurance, escrow, and even property services, so it covers a lot of the home buying process in one place. Currently, the stock is trading around $5, and the company is going through a transition phase. Revenue has dropped year over year, but at the same time, it's trying to improve operations under its Opendoor 2.0 strategy. The company is showing some progress, especially in improving inventory quality and increasing contract volume. It has also been working toward achieving adjusted EBITDA profitability over the next year, which means trying to move closer to making consistent operating profits. However, it still reported losses recently, including an adjusted EBITDA loss of about $31 million, and its operating margins are still negative. To grow further, Opendoor is launching new products like Opendoor Mortgage and using AI to improve how it converts home sellers on its platform. So in short, it's a tech-driven real estate company trying to turn around its business. There are early signs of improvement, but it's still in a rebuilding phase. Snap Inc. is a tech company best known for Snapchat, which is a social media app where people share photos and short videos that disappear or stay in stories. It also includes features like Snap Map, Spotlight, and filters that use augmented reality. Beyond the app, Snap also makes money through advertising, things like Snap Ads and AR ads, and it offers subscription services like Snapchat Plus. It has also explored hardware like its AR glasses called Spectacles. Currently, the stock is trading around $6, and the company is going through a mixed period. Earnings have been uneven, and Wall Street has become more cautious, with some analysts lowering their price targets. At the same time, there are signs that Snap is trying to improve its direction. A new board member, Luke Wood, signals a stronger focus on product and monetization strategy. The company has also announced around $500 million in share buybacks, which shows it is trying to return value to shareholders despite current losses. Looking ahead, there are expectations that revenue could grow to around $7.9 billion by 2029. But opinions differ on how quickly it can become consistently profitable. So in simple terms, it's a popular social media company with strong user engagement and long-term potential. But right now, it's facing pressure on earnings and investor confidence while trying to reposition itself for future growth. Recursion Pharmaceuticals, Inc. is a biotech company that speeds up the discovery of new medicines using AI, automation, and data science. In simple terms, they try to computerize drug discovery so it becomes faster and more efficient. They are working on several early-stage treatments for diseases like cancer and genetic disorders, with programs such as REC4881, REC617, and REC1245. These are still in clinical trials, meaning they are not approved medicines yet. The company also works with big pharma partners like Roche, Sanofi, Bayer, and Takeda. Currently, the stock is trading around $3, and the company has been under pressure. It recently hit 52-week lows and has fallen about 30% year-to-date, showing weak market sentiment. However, financially, it is not in immediate danger because it has a strong cash position, around $665 million, which should support operations through early 2028. That gives it time to continue research without urgent funding pressure. Analysts are divided on the stock. Some see long-term upside because of its AI-driven drug discovery model, while others are cautious due to uncertainty in how its drugs will perform in clinical trials and how the company should be valued. Estimates for its fair value vary widely, from about $1.92 to $9.08, showing how uncertain the outlook really is. So in short, it's an innovative AI biotech company with big long-term potential, but still early stage and highly uncertain in terms of results. That's it, and thanks for watching.